Right, okay. Entrepreneurs Relief. What is Entrepreneurs Relief? Basically, it is a relief whereby gains are actually taxed. Gains on business disposals are taxed at a reduced level of capital gains tax, and the qualifying rate is at 10%. Compared to the standard capital gains tax that you have 18% for basic rate payers or 28% for higher rate taxpayers. Okay, so let's have a look at who can actually claim the relief and what the general conditions are. Firstly, it's only available to individuals rather than companies, okay? And in most instances, Entrepreneurs Relief will be available to sole traders and partners who are selling whole or part of their businesses, company directors and employees who sell from a material stake in a qualifying company. How do we define a material stake? Well, basically it's a shareholder who works for the company and who can exercise at least 5% of the voting rights in that company. So looking at the general conditions, the relief is available where you've got a material disposal of a business asset or a disposal which is associated with that material disposal. Okay, how do we define a business asset? Basically, you can kind of categorise it in three kind of categories, if you want to put it. One is if you're selling the whole or part of your business, okay, that could be one thing. The second is if you are disposing of an asset which was used at the time your business kind of ceases. Okay, so if you've ceased your business and you are disposing of those assets, that's another time that will be classed as a business asset. The third being if you're selling any shares or securities in your personal trading company. Okay. What is a personal trading company? It's basically a company in which the taxpayer owns at least 5% of the ordinary share capital, is an employee or an officer of the company, but it does not need to meet the full-time test, so it doesn't have to be a full-time employee. Okay, and at least exercises 5% of the voting rights in that company. And I suppose one of the main criteria of Entrepreneurs Relief is you've got to hold that business asset for at least 1 year before the disposal to be able to qualify for Entrepreneurs Relief. I think that's quite a crucial thing. So how does this... yeah, sure. Yeah.
When you say you don't have to be full-time, would a 0 hours contract work?
Yeah, I mean, you could even, there'd be a planning point that I'll mention afterwards, but I'd say now, like, let's say you could just become like a company secretary, even an officer of a dormant subsidiary of the main trade code. That would still qualify. Does that answer?
Thank you. Yeah.
So how does the relief work? I would say Entrepreneurs Relief in capital gains tax is probably the only relief where there is a restriction on how much can actually be claimed as a 10%. And when I mean restriction, I'm talking about a lifetime allowance, which each individual has. And from April 2008 to April 2010, that lifetime allowance was $1 million. It subsequently got increased to 2 million, then it went up to 5 million, and now from 6th of April 2011, it's gone up to 10 million. So each individual has got a lifetime allowance of 10 million. So it can make qualifying gains on business disposals up to 10 million and claim 10% on those gains. And I suppose if you are in a fortunate position to be able to use up all that 10 million, then any gains exceeding that 10 million will be taxed at the normal capital gains tax rate. So higher rate, you're looking at 28% there. Okay. There is a deadline to make the claim. So let's say, for example, if you made the disposal in the 13-14 tax year, then you've got up until the 31st of January 2015 to be able to make that claim. And you normally would do it via your self-assessment tax return. Okay. How does Oh, God. Sorry. It's quite sensitive. How does Entrepreneurs Relief reduce the tax payable? So just a bit of some planning points here. One, you would want to try and spread the gain, let's say even just between your family members as much as possible to try and make full use of everyone's lifetime allowance. So let's say, for example, it's the husband, he's got his own company, owns all the shares. It's about to sell it in a year's or so time, and he knows that he will be making a big gain out of this by selling his shares. So how can he kind of reduce and try and make full use of the lifetime allowance for all these family members. Well, one way of doing it is it could gift the shares to its wife, to other family members. Are there any tax consequences? Well, gifting to your wife for CGT, that's a no gain, no loss disposal, so it's exempt. For stamp duty, well, it's a gift, there's no consideration involved, so don't need to worry about stamp duty there. If it's to other family members, again, it's a gift for stamp duty, so no consideration. But for capital gains tax, you could make use of Section 165 that I was talking about earlier, the relief for the gift of business assets. So therefore, it can claim Section 165 and there won't be any capital gains tax there. Okay, so the whole benefit of it is so that the gain can actually be spread around the family members, and therefore they can all kind of make use of their lifetime allowance. The other, I suppose, critical point here is, would they meet the qualifying conditions for entrepreneurs relief? So that's the whole point, so that they can actually get it taxed at 10%. Well, they need to hold it for at least 1 year, those shares. They need to own it, so you want to try and transfer at least more than 5% of the shares to them, and they need to be an officer or an employee of the company. So as I said, if it's the main trade co, it's quite easily to meet the criteria of being an employee or an officer. They could set up a dormant subsidiary, make some of the family members as a officer of that company, and the fact that that company is a subsidiary of the main trade co, that would still qualify for entrepreneurs relief. So there are planning points there that you can get your way round. Another point I just want to mention about the percentage of this, the 5% test of where for entrepreneurs relief you've got to own at least 5% of the ordinary share capital in the company. Let's say, for example, you've got a husband and wife, and they own a company, and let's say the ratio is husband owns 85%, the wife owns 15%. If, let's say, they're going to sell it quite in the immediate future, and then to try, and because the husband's thinking, okay, we are going to make a big gain, I want to try and split this gain as much as possible equally between the both of us, and he wants to transfer at least 35%, so make it 50-50, and they can both make use of their lifetime allowance and get as much as possible in the 10%, then that 35% which is transferred over to the wife would still qualify, and let's say they sell it the next day, the shares, the whole 50% for the wife will qualify for entrepreneurs relief. It's not like that 35% she has to hold for another year to be able to qualify for entrepreneurs relief. So it's kind of basically, it's looked at cumulatively. The fact that she originally owned more than 5% and she's had that for a year, that's absolutely fine. But let's say if we turn that around, and let's say the husband owned 96% of the company and the wife owned 4% of the company, then if he was to transfer, let's say 46% to make it 50-50, then she needs to own that 46% plus the 4% for a year before they sell it to be able to claim for entrepreneurs relief. So that's just, I suppose, a point just to mention on entrepreneurs relief, really, between husband and wife and the shareholding and the 5% test.